Welcome to LSB Feaster's Radio Aircheck and Classic TV channel.
It's the Tom Leykis Show.
What the hell is going on here?
And now, here he is, Tom Leykis.
Thank you for tuning in to the Tom Leykis Show. This is where America gets together to talk about the issues you really care about. It's a different kind of a radio talk program. We're the radio talk show that is not hosted by a right-wing wacko or a convicted felon. No, I am your host. Write down our telephone number. You're going to need it. It's 1-800-5800-TOM. 1-800-5800-866. I am in New York because, I was here the weekend that Shea Stadium closed. Shea Stadium is generally known by people in New York as a dump and has been a dump for a long time. Didn't John Gotti put the plumbing in at Shea Stadium? I think he did. A dump. So I don't think anybody is really sorry to see Shea Stadium go. But the Mets are moving to a new ballpark. Just as the Yankees, who closed Yankee Stadium a week ago, they're moving to a new ballpark. And here I am in New York City, and how amazing to be here on just an amazing day on Wall Street and an amazing day in Congress, an amazing day, period. Now, New York is not like Los Angeles. I'll tell you that right now, but not in the ways people in New York think. But I will tell you, with all the mayhem going on Wall Street, I heard CNBC in places you would never hear it in L.A. I heard CNBC today in a parking garage. The guys parking cars were watching CNBC. That's how serious things are getting. When the guys who park your car at the garage and charge you $37.95 an hour to park your car or watch at CNBC, you know this is bad. This is bad. Now, for those of you who haven't paid attention, and I know many of our listeners don't pay any attention to what's going on in the world, they wait till I say it. Okay, let me tell you what happened today. I'll just read you a story, and then I'll kind of give you my take on this. This from the CNN.com website, but believe me, you can probably read this. It's probably going to come in your Valpak envelope this month, this story. It's everywhere. If you haven't read it, this story's coming to read you. It says here, stocks skidded today with the Dow Jones Industrial Average slumping nearly 778 points. You heard right. The Dow Jones average went down today 778 points. It is the biggest single-day point loss ever for the Dow Jones Industrial Average. 778 points. This happened after the House of Representatives rejected the government's $700 billion bank bailout plan. Now, you've been hearing about that story, whether you care about it or not. And I'm sure if you heard about that story, you were under the same impression everybody else was. The fix is in. This is a done deal. Everybody met over the weekend in sessions behind closed doors, and they were going to get this plan ironed out, and it was going to be protecting the taxpayer, and it was going to make sure there were no golden parachutes for CEOs, blah-bitty-blah-bitty-blue. Well, everybody had their little press conference and said, oh, yes, the Republicans and the Democrats, we worked hand in hand. We worked together on this bill. Everybody put a lot of work in on this bill, blah, blah, blah. And it looked like this bill was going to pass. Well, it looked that way to a lot of people. But it seems to me the average person, not in favor of this. Not in favor of this. People are not in favor of giving the bank $700 billion to play with no questions asked. They already did that with their own money. Now, the story continues here. It says the day's loss knocked out approximately $1.2 trillion in market value. The first post-$1 trillion day ever. according to a drop of the Dow Jones Wilshire 5000, the broadest measure of the stock markets. Do you understand what that means? If you took all of the stocks, multiplied by the number of points they dropped, multiplied by the number of shares outstanding, that's what you get. America's corporations are worth $1.2 trillion as I sit here, less than they were 12 hours ago. Yikes. Says here the Dow Jones Industrial Average lost 777.68 points, surpassing the 684.81 point loss on September 17th, 2001. That was the first trading day after the September 11 attacks. Now, before you go jumping off a building or a cliff, it says here that the 7% decline that this represents doesn't rank among the top 10 percentage declines. The Standard & Poor's 500 Index, how many of you have the S&P 500 Index fund in your 401k? Everybody has one, right? And that's like the simplest, most common mutual fund, the S&P 500 Index. That's down 8.8% today. Today. Remember opening your 401k statement after the second quarter and you saw it was down 10% for the year, or 12% or 14%? Remember that? The S&P 500 Index dropped 8.8% today. Just today. And the NASDAQ Composite, NASDAQ is the stock market that has all the tech firms, all the smaller growing companies on the rise, what have you. That fell 9.1%. Wow. Now, it says here in this story from the CNN.com website, stocks tumbled ahead of the vote and the selling accelerated on fears that Congress would not be able to come up with a fix for nearly frozen credit markets. The frozen markets mean banks are hoarding cash, making it difficult for businesses and individuals to get much-needed loans. I mean, you know what all this means? And forget all the numbers for a second. On top of this, by the way, there was other things going on. Wachovia Bank is being purchased for pennies on the dollar by Citibank. That also happened today. That's a big enough story. That got shoved aside for the stock market story. It's unbelievable. But you know what all this means to you? It's going to be harder, especially if you're one of those deadbeats who's been getting stated income loans or payday loans or buying houses with no money down. It's going to be impossible for you to borrow money. I mean, you want to buy a car? Good luck getting a loan unless you've got stellar credit. If you've got stellar credit, you're going to have to put more money down, and you may even get turned down even with stellar credit. And when that happens, the economy is going to be at a standstill. Just so you know. The story continues. It says here, Drew Canali, chairman and CEO of Canali Trust Company, referring to the House vote, said the stock market was definitely taken by surprise. He said, if you watched the news stream over the weekend, it seemed like it was a done deal. That's what I said. But the money is being held hostage to the political process. Then, of course, buried in the story, it says what I said earlier. Stocks had fallen from the get-go Monday morning. In addition to expectations for the bailout, there was also news that troubled Wachovia had to sell its banking assets to Citigroup. A number of European banks also collapsed. But the possibility that the House won't pass the bailout plan caused stock losses to accelerate. Jack Ablin, chief investment officer at Harris Private Bank, said, it's a huge disappointment. And now they say, although another version of the plan will likely go before Congress, investors are concerned that passing the bill could be a more drawn-out process. Now, we can sit here and go through this whole story, but that's scary stuff. And, you know, we love, certainly on this program, we love living our lives day to day and having fun, and nobody likes having fun more than I do. But one of the reasons I have so much fun is because I save my money. I invest it, I save it, I plan. And what is, I think, annoying about this whole situation for many people is that the people getting punished are the people who do the right thing. The people getting punished are the people who save, invest, plan, don't borrow too much, pay their debts on time, make their mortgage payments on time, make their car payments on time. These are the people who are being punished. And in a bailout, the people who are not being punished are all the people who engaged in bad behavior. All the people who took stupid risks. They get rewarded. We get punished. Responsible people get punished in favor of the deadbeats, the losers, and the thieves. That's what this is all about. You don't have to know a lot about this story to have an opinion about it, because I know people are feeling the heat. I know you're feeling the heat. And I want to tell you, it reaches right up the ladder. I'm feeling the heat. You may be angry about this. You may be afraid. I'm going to give you an outlet to talk about it right here and now. All you need to do is dial me up.
1-800-5800-TOM. 1-800-5800-866.
The Tom Leykis Show. Coming to you from New York City at 1-800-5800-TOM. On the way over here today, I was crossing 10th Avenue. I could smell smoke. I had to wonder if that was Wall Street. 1-800-5800-TOM is our telephone number. And we go to your telephone calls here. It's James on the Tom Leykis Show. Hello.
What up, Tom?
Not much, James.
I was calling about, it's just funny, I'm actually going to be opening a 401 today with my work. And I don't really know nothing. I just work. People tell me I need one to retire and all that, blah, blah, blah. But I was wondering, what do you think I should do? Should I be putting in big right now, or maybe just do the minimum until the market kind of balances out?
Well, if I were you with a 401k, I would not be, in fact, with any investment, I would not be throwing loads of money in at one time. You need to go gingerly into the market. And you need to do what's called dollar cost averaging. And a 401k is one of the best ways to do it because they take that same amount out of your paycheck every pay period and they invest it. And if the market goes down, that means you get more shares at a better price. And if the market goes up, you get less shares at the higher price.
So if I just put more where I could still, got enough to live off of, it'll be beneficial.
Well, are you putting anything in now?
I'm opening it today as soon as I go home, like that.
All right. Well, don't be starting with a large amount. By the way, I don't think 401ks allow you to put a big amount in the beginning. They just start taking money out of your paycheck.
Exactly.
So have you decided on a percentage you're going to have taken out of your paycheck?
I haven't figured that out yet. I got to go back over my just my finance, figure out what I'm paying my bills for the month, and then what I could be able to throw in while I'm still living how I want to.
Right. Well, my recommendation to you is do not be putting large amounts in that are more than you can afford.
Okay, but I should do more than the minimum, though, right? At this time?
There's no such... Wait, 401ks are not a casino, okay? You know nothing about the stock market. Nothing. And you think you know a little bit because you've been reading this story about the stock market going down. You think you're going to be able to make some money here. I'm telling you, the stock market is as volatile as I've ever seen it. And that means you're not going to put any more in today than you would put in 6 months from now.
Okay.
You're going to put in the same amount every pay period.
Correct.
You are not going to try to what they call time the market. You're not going to try to figure out when's a good time to put more in because you don't know enough about the stock market. You don't.
All right.
Let me ask you a question. What if you put the most you could afford in tomorrow when you sign up for your 401k, and then next week the market drops another 2,000 points?
Well, I'm not worried about that because this is, this isn't something I'm going to try to collect on next month and next year. I'm looking, like I said, towards retirement.
Right, but my point to you is that is why you need to come up with a sensible plan where you put the same amount in every pay period.
Okay.
Every pay period, when the market is good and when the market is bad.
Word taken, Tom.
Got it?
Can you take me out with a squeaky bed, a grassy ass, and a Snoop Dogg?
I think I can.
Gracias.
Biatch. 1-800-5800-TOM is our telephone number. We're talking about today's disaster on Wall Street. If you're just tuning in, maybe you're just hearing about this for the first time. The stock market, Dow Jones average, down 777 points. It's the biggest one-day point loss in the history of the stock market. The biggest. Wow. Let's say hello to Zach on the Tom Leykis show. Hello.
Hello, Tom.
Hello, Zach.
How you doing, sir?
I'm doing okay.
Fantastic, and I do care. As a matter of fact, I just tuned you in. I'm on my way back to my next service call, and I want to agree with you to all the losers, thieves that overspend, and then the responsible people like us that save, work hard, and plan ahead. We suffer, for this tragedy. I really agree with you. I think this is a wake-up call for all the losers and the thieves kind of, for the future plan. Right now, I don't have a lot. I save, I work hard, but I live within my means. And I think, right now people need to, understand by definition what it means to live beyond your means. Not buying
Yeah, but
something.
see, even people like you and me, I live below my means. I save, I invest. I don't buy things I can't afford. But even people like you and me are going to get punished. For
Yes,
example,
sir,
they're going to take our tax money and bail out banks. Banks
Absolutely.
that did things you wouldn't do. They lent money to a bunch of deadbeats and stiffs. And when the money couldn't be paid back, now they want us to help them.
We're all in this. We're all one in this one. That's the way the government and feds look at it. But I agree with you, sir. I agree with you. You can blow me up.
Yeah, I can blow you up. Of course I can. 1-800-5800-TOM. That's our telephone number. Here's Brandon on the Tom Leykis show. Hello.
Hey, Tom, how are you?
I'm okay, Brandon.
A long-time listener, first-time caller.
Yes.
My question for you is, what are we to do? Like, people out there that have been waiting to buy their home for the first time, they've been trying to play the waiting game, and now this stuff happens. What is your suggestion for that?
Well, this is a good time to be buying a house if you've got good credit. The hard part is going to be getting a mortgage. I see that 30-year fixed-rate mortgages have gone up like 0.2 of a point in the past week.
Right.
And that's if you can even get a mortgage.
Right.
So you have got to have really stellar credit, do you?
I do. It's about 750 or not around there, so it's not too bad.
All right, that's pretty good. You need to keep it up there.
Yeah.
You need to pay every bill on time, even the little ones.
Okay.
And you're going to have to put down, I'm telling you, people think I'm crazy. But I think in most cases, you got to put down at least 15 to 20%, possibly as much as 25 to 30%.
Well, what I've been looking at was the VA loan.
Right.
I was in the military, so I was trying to use that, but they're telling us, hey, we got to have something down, and we can do that, but I was trying to go without doing that and utilize the VA
but you know
loan.
what? If you can't afford, let me tell you something. If you can't afford to put money down, you cannot afford to own a house.
We could put it down, but I was just trying to not do that.
But the point is, if you have to worry about your money so much that putting the down payment would mean you have to live on the edge, you can't afford a house.
Okay.
Because do you know the other expenses of owning a house? I'm amazed, and this is how we got into this problem in the first place. I'm amazed how many people don't know how much it costs to own a house.
Yeah.
They think, why pay rent to somebody? I could buy my own house. Well, you know what the landlord of your house pays for, the one that you're renting right now? Your property taxes, your insurance, the maintenance, all of which you're going to have to pay.
Right.
I mean, do you have any idea how much that costs?
I have an idea, and it's not cheap. I know that.
Let me just give you an example. I own a microscopic piece of property. It's in the Hollywood Hills, but it's microscopic. I pay $8,900 a year just in property taxes.
Wow.
All right? Now, there are properties where you might pay less, but there are properties where you pay more also.
That's true.
Home insurance. You need to insure yourself against fire, wind damage,
Earthquake
theft, homeowners insurance. You have to have that or you won't get a mortgage.
Yeah.
That's several $1,000s a year.
Good point.
And then on top of that, when that toilet overflows, you can't call the building manager. You are the building manager.
Yeah.
And if you don't know how to do that stuff yourself, you're going to have to call in a pro.
Yeah.
Do you know how much that costs?
It's not cheap either, you know?
Right. And when your house needs to be painted, again, inside or outside, who do you think's doing that?
Well, gotta get somebody.
Well, the thing is that people who think about buying a house without a down payment, I know, because I know people like you. People who are afraid to put down the down payment because they need the money for, like, living, they can't afford all the other expenses of owning a house.
Yeah.
So as much as it's the American dream to own a house, my opinion is that you should wait until you've got money for a down payment and you can afford to own and operate a house.
All right, Tom.
And it's going to cost you a lot more than that place you're renting now. A lot more.
Yeah.
The tax deduction you're going to get won't nearly pay the cost of it.
All right, Tom. Well, I appreciate your advice. Can you take me out with the bong rip and tribal style and thank you, Jesus?
I certainly can.
Thank you, Jesus.
Sorry about that. 1-800-5800-TOM. That's our telephone number. The Dow Jones average dropped 778 points today. It's the biggest single-day loss in the stock market ever in terms of points. There have been higher percentages. This is only down about 7.1%. But never has there been a bigger point drop in one day. Never. And it's getting pretty scary out there. This is Taylor on the Tom Leykis Show. Hello.
Hey, Tom, how's it going?
It's going great.
Love your show.
Thank you.
I just wanted to make a couple points. As I was thinking, why are all these politicians from both parties going along with this whole entire plan? And I think it's because it's the big banks, big investment banks, big business that pays for their campaigns, that pays for all their expenses. U.S. banks spent $400,000 on a party for John McCain in Minnesota. They're all trying to claim that this is for the people, but it's really not. They're just trying to make people believe that it is when it's really for big business. And
well,
I think that's BS.
I don't disagree with you. You know, the Republicans, by the way, the Republicans voted against this bill today. I don't know if you know this. After Bush came out and said we need to do this, it was Republicans who voted it down. Which, how they're going to explain that, I'll never know.
Can I make one more point?
Well, I was going to finish on what I just said, and then you can make another point. The fact is that the Republicans love to talk about free markets. We need to get off the companies' backs and let them do what they do and let the free market work and blah, blah, blah. And isn't it amazing? Part of a free market means you can invest, and if you have a good idea, you can build up a big business and, you can grow it and make new products and everything. But the other part of the free market is when you fail, you fail. And what these hypocrites want is they want the freedom to do whatever they want unless their dopey schemes don't work out. Then they want us to bail them out like welfare.
It's such garbage.
It's outrageous. How do we tolerate this?
I have no idea. But, Tom, my second point is the Treasury has been printing money for the last 8 years, and the dollar's not worth anything. If this $700 billion goes through, that's just going to make the dollar even worse, even less valuable.
I totally agree with you.
In the long run, it's just going to do worse. If there's no bailout and the stock market hits a bottom and everything can build up back to the top, then it's going to do it naturally, and there's going to be money and there's going to be hard assets behind it. Right now, if this happens, it's going to make the dollar bills in everybody's pockets absolutely useless. It's going to be just more spending. It's such garbage.
And by the way, this is what I've been telling you about. There's two ways to tax the people. Republicans love to tell you that they're going to lower your taxes. And, in fact, it's probably true that if you're in certain tax brackets, you're paying a lower percentage at the end of the year when you file that IRS form. But there's another more insidious, more sneaky way of raising your taxes, and that is by printing money to buy things that we don't have the money to buy, like wars in Iraq and what have you, or bailouts of the banks. And that makes each dollar worth less. So technically they could say they never raised your taxes. But as far as diminishing the value of the dollars you have, well, they don't see that as a tax increase. I do. All right, Taylor. Taylor was so overwhelmed by my oratory that he was speechless. It's just past the hour on the Tom Leykis Show. What a day on the stock market today. The Dow Jones Industrial Average with the biggest single-day point loss ever, 778 points. 778 points, 7.1% decline in value. The S&P 500 index down 8.8%. The NASDAQ down 9.1% in one day. This, by the way, you think this doesn't affect you? Do you have a 401k? Do you have a 403b? Do you have an IRA? Do you have any kind of retirement account? You own these stocks. This came out of your pocket. Trust me. Janine on the Tom Leykis Show. Hello.
Hi, Tom.
Hi, Janine.
I'm just really confused. I thought this was supposed to be a good thing that they let this thing go and didn't approve the $700 billion.
Oh, I'm not saying it's not a good thing. What I'm saying is that, put it this way, for me, I have a job, I have a contract, I'm guaranteed to make money.
Sure. So
for me, there's no skin off my nose. If unemployment goes up, if companies go out of business, no problem for me. Mm-hmm. But there is a problem for people. Now, having said that, I do believe that the banks should be allowed to go down in flames. I do.
Absolutely.
But what I also know is that when they do, people like you who don't know what that means are going to feel the burn. You're going to feel the heat because you won't be able to borrow money. There will be, in my opinion, at some point, widespread layoffs and companies going out of business. And you're going to say to yourself, well, hey, wait a minute. This isn't what I bargained for. Now, that doesn't mean I'm in favor of the $700 billion. I'm just saying that in order to fix this, we have to go through a lot of pain. And I don't think the average person has any idea what kind of pain we're going to go through.
No, but it has to happen because otherwise we're just covering up the problem. And what's the next bailout going to be?
Because that's well, you know what? I agree with you. I do believe that everybody has to be taught a lesson. Everybody has to be taught that it's a free country and you can take any risk you want. But you know, if you go to the MGM Grand or Caesar's Palace and you bet everything on red and it comes up black, the government doesn't come and give you the money back.
And they shouldn't.
But that's what we're doing here with these banks.
Well, it doesn't look like it,
They lend money to a bunch of stiffs and deadbeats and losers who never should have been borrowing money, never should have been buying houses. They artificially drive up the cost of buying a house for the responsible people with good credit. And then when this scheme doesn't work, they go, please, we need $700 billion, please.
Well, no, I'm one of the responsible ones, and I was totally livid that day you were talking about this plan for them to do this. And so when I heard the news today, I was excited, you know. So
yeah, I was amazed because I thought it was happening. The way they were talking on the news, this looked like it was going to happen. But the best part, if you follow politics at all, is that your Republican president, George W. Bush, went on TV. Remember, he took TV time last week. If I could let the banks fail, I'd let them fail. if I thought it would do it without pain to you on Main Street, but I know that we have to do this. We have to do the right thing, so please pass the bailout package. Did you see him make that speech? Essentially, that's what he said.
Yeah, I actually didn't see it, but...
No, but here's what's amazing about it. And here we are. We're like a little over a month from an election. And the Republican president goes on TV and says, please pass the bailout package. And who voted against it? Republicans!
Exactly. And he doesn't have to deal with it.
That? How is McCain going to explain that? It's unbelievable.
Mm-hmm. All right, Tom, can you roll me up African tribal style?
Yes, Janine, I can.
Baninge, 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 sopenza. Baninge, 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 sopenza. Kotelenge, asika mama. Oya kotelenge, asika mama.
1-800-5800-TOM. That's our telephone number. Christian on the Tom Leykis show. Hello, Christian.
How's it going, Tom?
Great.
Hey, I had a question for you. With the company I work for, they give us a regular 401k, but I was wondering what your thoughts were about, they also offered to us a discount employee stock purchase plan. If you think during this time period it's a good time to invest in that, or...
Do you understand the plan?
Yeah, what they do is each quarter they take the high and the low, then you get the average. Whatever the average is, you get to buy it at 15% off the average of the high and the low.
If I were you, I would wait until this quarter's over.
Okay. You don't think it'd be a good thing to start up right away, though?
Well, the last quarter ended on August 31st. Do you know how much the stock market and probably your company's stock have dropped since August 31st?
Yeah, it's been probably about 3 points.
I don't know. Well, look, if your stock is worth 4 points, 3 points is a big drop. If your stock is worth 100 points, not so big.
Right, yeah, it's been averaging about like $56, $57 a share. Then it's down. Today it's at 54.
So on August 31st, it was 57.
Right.
Well, you could start now, but I'm guessing the market is going to drop even more before it starts going up again.
Okay.
Just a guess.
All right, well, hey.
I would not. Here's the thing. I would not be in a rush to do anything having to do with investing right now. What I would be in a rush to do is save cash money.
Okay.
In an insured institution.
Okay. Like you said before, go to bankrate.com and find just a good place that has like a good interest rate that you can save your money in.
Yes, and I would, if I were you, make sure, I can't believe I have to say this, but I always do, make sure all your debts are paid.
Right. No, that's not an issue for me, so.
So you have no debt?
No, I mean, the only bills I have are like my rent and then my utilities, and that's about it, and the rest of it's just...
So you don't have a car loan, a student loan, you don't have...
No, I paid the student loans off already.
Good.
And I don't have a car loan or anything. So.
That's good.
So you just recommend just cold hard cash, put it in the bank, and just keep it there until everything starts kind of coming back up again?
That would be my recommendation at this point in time, is to just make sure that... And by the way, another thing I'm recommending to people, start cutting the stuff out of your life you don't need.
Right.
I mean, this is really time for people to just whack Starbucks out of the budget and whack cigarettes out of the budget.
Right.
And whack pretty much anything out of the budget that you don't need.
Yeah, I don't have to worry about any of that stuff, so... well, hey, could you take me out Kobe style with the bong hit, too?
I certainly can.
This is about us. She's so special to me. You're a beat to my heart. You're the air I breathe. She's so special to me.
Tom Leykis. 1-800-5800-TOM.
From New York City, I'm Tom Leykis. And what a day to be in New York City. On the day of the biggest single-day point loss ever on Wall Street. The Dow Jones Industrial Average dropping nearly 778 points. That representing a little more than 7% of the decline. S&P 500 index down 8.8%. The NASDAQ down 9.1%. Again, these are not just numbers. If you have a 401k and you've ever looked at it and you saw it was down 10% for a quarter, you're probably panicked. That's for a quarter, 10% for a 3-month period. NASDAQ went down 9.1% today. today. Joining us on the telephone to help us sort this all out and to tell you why this is such a big deal. And if you don't know it's a big deal to you yet, you will know it's a big deal. Mike Crittenden is a banking and economic reporter for Dow Jones Newswire's. Mike, thank you so much for joining us.
Oh, thanks for having me.
Of course, I'm asking the same questions everyone else is asking. In this case, though, we have an audience that I think they want to know more. They hear this story, but to them, it's a bunch of numbers and a bunch of, headlines, a lot of politics involved. But the average person has no idea how this, between the bailout package being turned down today and also the drop in the stock market, how this is going to affect them. And that's where I want to take this. What happened today, and why is it important to the average person?
Well, I think the first thing here is uncertainty. Any uncertainty in the credit markets, in the stock market, eventually trickles down. I think the easiest example to understand is if, say, an auto finance company no longer wants to make loans for cars, which means your car salesman's not selling cars, he's not making commissions, his job is hurt. The guy who builds cars in the auto factory, say down in Alabama, his job is hurt, and it just trickles down. It's a building effect. So that's the basic everyday, the guy on the street. This is how this affects him, is a lot less credit is available. Maybe you can't finance those improvements to your house, stuff like that. As for what happened today, this stunned everyone here in Washington. The negotiations on this have been, going on for a week, night after night until the wee hours. Everyone thought we had a deal. Everyone thought today's vote was going to be close. And really, it was just stunning. House Republicans decided not to stand in they decided to stand in the way of everything.
Now, this is the part that doesn't seem to make sense. Last week, the president, last I looked, he was a Republican, took up our airtime to go on TV and tell us we needed this bailout package and begging Congress to pass this bailout legislation as soon as possible. This has got to get done. And so I'm watching television today, and there is the vote. And who voted against it? Republicans.
Yes.
How did that happen?
Well, part of it, he's only going to be in office for a few more months. He has a, 30% approval rating at best. A lot of these candidates, they're 6 weeks away from an election. They're looking out for their own, and enough of these Republicans decide that they would be better served going back to their constituents and their voters and saying, hey, I defeated this, because this isn't an issue a lot of people understand how the bailout affects them. But all this global uncertainty, you saw Wachovia get bought today with Citigroup. You have all these European banks failing. This is going to affect people on a day-to-day basis where, they have less, this does affect people, and, people's bank accounts aren't really at risk. The FDIC has never lost a penny, but it affects the way people go about your everyday business.
I read somewhere that the FDIC has $35 billion to protect depositors. But when you look at the size of some of these bank purchases, the size of some of these failures, is $35 billion enough?
Yeah, the FDIC is fine. They're actually in the next couple of weeks going to announce they're raising premiums that the banks pay them. So the FDIC, people who have less than $100,000 in their accounts, they're fine. They don't need to worry. Those people don't have to worry about being able to go to the ATM and get their money. This more affects, what business decisions small businesses make, whether or not your company is going to expand or put on a hiring freeze, whether or not they're going to be able to, give people raises, across the board, stuff like that. That's how it trickles down to your everyday person.
But, of course, I do think, for example, when the FDIC comes to the banks and says we want more in premiums to protect depositors, the bank's not just going to hand that over or skim it off their bottom line. They're going to pay lower interest rates to the depositors, don't you think?
Yeah, it does. It will trickle through, but it's something the FDIC has to do. And one thing they're going to do is charge riskier banks, maybe some of those banks that offered a lot of these bad loans, charge them a little more. And so,
the whole situation is very interconnected, which is sort of why you're seeing, the Dow crash 777 points today. I mean, it's you should have seen it during the vote. I mean, you can trace from where the vote started to look bad and the Dow started collapsing. I mean, it's not pretty, and the politics of this are pretty intense, as you saw after the vote. And last week when Senator McCain came into town and said he was riding to the rescue. So there's a lot at play here, and it really did stun people here in Washington.
Yeah. Now, let's talk about the presidential candidates for a second. I'm reading analysis that indicates that John McCain saying he was suspending his campaign and going back to Washington to help out with the bailout, and then later on reversing course and coming back, might have hurt him.
Mm-hmm. Well, and the thing is, like I've covered these negotiations on this bailout the last few weeks. Spend lots of hours in the Capitol, and I mean the fact is, neither McCain nor Obama, they weren't at the table.
No, that's certainly true. Absolutely.
The Tom Leykis Show. 97.1 FM Talk.